Goldman's conference call currently underway. Leslie, what are you hearing so far?
Yeah, Mike, deep into Q&A at the moment. Goldman CEO David Solomon saying in his remarks earlier that the U.S. economy has proven to be more resilient than expected, and those are reasons to remain vigilant. Solomon noted that Treasury rates, what you guys were just talking about, have, quote, risen sharply, while recent inflation and employment data coming in above estimates drives that market expectation for higher for longer.
There still are a number of sectors in the economy that have yet to absorb the impact of higher rates, especially in light of the further tightening in financial conditions we've seen over the last quarter. At the same time, there's been an escalation of geopolitical stresses around the globe. With the continued war in Ukraine, ongoing tensions with China, and now the conflict in the Middle East, overall levels of risk are more elevated than we've seen in quite some time. While we don't know where this will all lead, it could impact economic growth and stability in the U.S. and around the world, and we remain cautiously positioned.
Solomon also spoke about regulation, specifically those higher capital rules outlined in the Basel III Endgame proposal over the summer. He said that those rules, as they're proposed, go, quote, way too far and could result in negative consequences, including increasing the cost of credit for businesses, pushing more activity to the unregulated banking sector, something that could increase the systemic risk, he says. And third, U.S. competitiveness will go down for our capital markets in the U.S. Solomon says the net result would be slower economic growth in its totality. Now, Solomon says regulatory uncertainty and those geopolitical risks that he outlined earlier remain top of mind for him, and we've seen that basically across all of the major banks reporting so far, guys.